Hey everybody, welcome back. Sive here with the ForexPeaceArmy.com. Let's have a look on the gold market. So yesterday the action was a bit stronger than we thought, or better to say, not just as we thought. We just suggested some pullback. That should give us the chance to take the position, but market was going directly to the upside, and currently it comes to resistance area that potentially might be handy for another attempt of the position taking. Trend here is changing on the bullish, but this session is not closed yet, and MACD stands very close to the price action, taking into consideration that within 2 sessions we will get the payrolls. Something else could happen, but hardly we will get the grabber, just because market already stands too far from the line. So to form the grabber, market will have to drop below these lows, or at least very close to these lows, to close below the MACD. So most probably we will not get anything, at least what is related to the possible bearish grabbers. In fact, gold currently stands in the same situation as in euro currency, as it also strongly related to the performance of the dollar. And as already explained in today's video on euro currency, if you take a look at the dollar, here is where a tricky moment stands. So from one point of view, we have big reverse hand and shoulders pattern that suggests strength of the dollar, and actually we even have the bullish grabbers on the bottom of the right arm. So market stands currently at the culmination point, where the bulls have no option. They have to hold this point and have to trigger upward action. If they will fail to do this and market will drop below this area, it immediately leads to failure of the pattern and drop of the dollar below the 95. Correspondingly, for the gold, it also will be decisive, because once dollar will start failing with the bullish setup, gold starts keep accelerating and starts accelerating higher. But this is not all yet. If you take a look carefully at the weekly chart, we have also the bearish grabber in place, and in fact the failure of the daily patterns immediately trigger this pattern to action that suggests also drop below this area. So that is how really important the current price placement on the dollar, on the euro currency, and other assets. For the gold, it means that here we could get upward continuation. So I would not be surprised if even we will get a kind of the ABCD in the case if dollar will keep falling, and if bulls on the dollar will not be able to hold this support area where it stands right now. So it means that currently, as we do not know what will happen, I mean whether they will hold this lows or not, we could consider the possible position taken in both directions depending on the circumstances that we will be. For example, on the 4 time frame chart, let's have a look what we could get. With this possible down bottom, it has minimum target around 48.15 area approximately. But at the same time, you could see that market is entering some kind of the consolidation, as we said. For the bears, it is critical to stay below this area. But now market is returning back and returning with this fast action. Now it's just meeting 47.41, but probably it could move slightly higher to reach this area. And if by some way we will get the symmetry, which is very probable, so for instance, we will get some pullback here, maybe not as deep as this one, not back to the neckline, but at least some pullback here if it will happen, that might be a great opportunity to consider taking a long position. Because in fact, here we have good thrusting action. It is suitable for Jordan Napoli bread and butter trade, momentum trade. So any retracement, some 30% retracement, even back to the 47, it already will be the chance to consider taking long position with a further continuation. Not just to the 48.15, but it might be, in the case of the drop on the dollar, it might be even stronger performance, even above this area. So that's what we have for the bulls. For the bears, it's also might be some chances. For example, once the target will be completed. So here, by the way, guys, take a look. We have even double repo failure pattern, double repo sell failure, and market is moving higher. So next target of this minor butterfly is 47.62, which is perfectly agrees with the neckline, or just not neckline, just this level. And once market will complete it, some pattern might be formed, the market starts some retracement that we talked about. So bears, for example, could keep an eye on this possible head and shoulders if it will happen, or even trying to sell on the top, but it will be risky, although cash risk will be very small. So just place stop slightly above this area, watching for the pattern. If it starts forming, you could consider a small scalp short position taking for retracement purposes. But later, who knows what the perils numbers will be, what in general will happen. Currently, everything might happen, and just if you initially possessed just for a minor pullback, later it could lead to the stronger downside performance. It's also possible. That into what's on the chances. So as a bottom line, bulls should wait when the 47.60 target will be reached and then wait for a pullback, approximately somewhere back to the 47 area at least, or even lower. Bears, because currently overall performance stands against it, better to not act without clear pattern. If we will see clearly that market is preparing for downside reaction, forming hand and shoulders pattern, something like this, theoretically also might be used. Right at this point, right at where market stands right now, I do not see any good chances because they potentially possible, but they are not ready yet. So we just need to wait a bit and see. That's probably all for now. See you tomorrow.